Hey guys, thank you for dropping by to see my video. Today I'm going to share with you about how to see a trend and what are the common mistakes that people do when assessing the market or analyzing the market, and what you can do over the next few months or maybe this year. Okay, so let's just get down to it and skip all this boring stuff. I'll just go to my whiteboard. Okay, let's make it simple, right? Okay, like for instance, right, in terms of the trend. Okay, for the trend, there are a lot of time frames that you guys can see in the charts, right? There is a monthly chart, there's a weekly chart, there's a daily, followed by the H4, followed by the H1, M30, and so on and so forth. Okay, the thing is, right, what I'm trying to let you guys as a start, okay, focus on these two. Okay, focus on these two. Slowly then you will get to learn more about how to trade your weekly and your monthly, but get these things right. This is your basic. If you can't get this right, then I'm afraid the trading career is going to be a bit hard. All right, and in terms of these two time frames, right, just remember the process. Your daily is vital to know your trend, is vital to know your bias. So in this case, your daily is your higher time frame analysis, and H4 will be the entry, and in this case the lower time frames. Okay, just focus on these two is good enough as you try to practice and get more rhythm to your strategy. Okay, some people might ask, can I go take my H4 as a trend and H1 M30 as my entries? First of all, I don't recommend lower time frames, and I never do. I used to trade lower time frames, and then I find it very unreliable, and the price action is very messy. So in terms, when you go, see, like when you go as high higher time frame, as you go your time frame a bit higher and higher and higher, you will find that there is less noise in the market, and the candles is very nicely formed, and there is a lot of reliability in terms when you go higher. The more lower time frames you go, right, the more unreliable is the trend, the more unreliable the movement. That's why, as you see, right, when you go lower and lower and lower, right, you can see the candle move a bit more faster. The fastest is of course the M1, right, or M5 or M15. You can see that the market move very very fast, and this is going to, while it's certainly generate a good amount of profit for some people who is a scalper, or it's okay, but it's that. But then the thing is, I find that that is quite an unhealthy way to trade. That is the reason. That's the only reason I would say why I do not go to the lower time frames. I've tried before; it sucks, so I can't do. And I can't do it. All right. So my best is really going to the daily H4. My focus is all these four time frames. But your bread and butter must be on your daily and your H4. Okay. So we are going to get this. Just get that clear for you. Okay. So for your daily trend, right? So for your daily trend analysis, right? So you need to find out first what what the market is doing. Okay, what the market is doing. Like for instance, you see that the market in this case, all right, right. So when you see the market form this way in the daily, the first thing that pops in your head is that you are looking only for one and you're looking for sell. There's nothing wrong when doing that. Okay, let's say then you are looking for a sell maybe around here. Okay, you're looking for a sell around here. You're looking for a pullback. Okay, and then what happens, that price goes up there and you manage to enter, and this is the daily as I'm talking about. Okay, let's just assume that. Okay, this is a daily, and then you took a sell and then price went down here and you are happy. then you think that price will keep on going down. But then what happens that you did not close, and then you set to break even, and then it went there. And then that is where the new trend starts. Okay, so this is what happens most of the time. Okay, so the thing is, you can't trade in this manner. The thing is that when you see a daily analysis, when you look at your analysis from your daily, right, as price gets lower and lower and lower, right, it's reaching a demand zone, because demand zone is where people buy, and people buy when price is low. That is why you are going to go for sell. There is a chance that your sell is not going to work out for a limited time only. Okay, before the buyers came to push the price up. And once this happens in my daily, and once I see this, what I do is that, okay, what did I see? I see a push towards the upside. And what does that push did? The most important point is to know what does that push did. That push break a previous resistance, which is over here, that bring the market down. So in this case, this supply has been taken out by this demand here. So in this case, we can also say that now the daily bias is moving towards the upside. So what I'm looking for is only to go long. I'm not going to sell even if price goes down. So in this case, when price goes down here in the daily, a lot of people are looking for sell. Alright? And this daily drop is a H4 downtrend. Okay, don't be mixed. This daily drop is a H4 downtrend. And that is where people buy. But I'm looking for people sell, sorry. But I'm looking for a buy in terms of pullback to this broken area of resistance, using it as a support or using it as a new demand. Previous supply changing into new demand to break into new supply. Okay, so that is how I see my charts. Okay, let's see in terms of the cat yen that I took recently. Let's see whether okay. This is the cat yen that I took recently, right? So if you look at this cat yen, when I look at the daily analysis, right, say why I took a buy around there, right? Look at this daily analysis. Okay, what I see there was a push towards the upside here. Okay, what does that push did? That push break a previous resistance or a supply. The nearest one will be around here. If you can see this point, I'm gonna show it to you. This point here. Okay, this is a base drop or a lower high. Okay, so that this resistance break out this this push break out this previous supply here. So now this supply has been taken out. So any drop down, in which if you look from here, this drop here is a H4 downtrend. This one is a H4 downtrend. Okay, let's see where the if you can see that line in the H4. See? H4 downtrend. We can see that the H4 downtrend clearly states that. Okay. So now you see that there's a pusher breaking out this previous supply. So if you go and drag that previous supply, right, you can see that it has turned into new demand at this point here. Okay, and that this is where the uptrend starts. And why I buy here, then I say, okay, in this case, price is moving towards the upside. And where is the next clue? The next clue, there was a pusher. And what that push did? That push break a previous supply, which is around here. And that is why I buy. A very, very, very simple way to find an entry. Okay, but you have to you have to practice and all these things. Okay, I just need to look at these things and I'm good to go. I don't need indicators. I don't need any kind of, it's just naked price action and understanding about basic supply and demand, and then where's the current push. If you look from here, right, there is no down structure. From here, Look from here, the bigger picture. Look at the bigger picture of this. The bigger picture that I see from the daily in this pair, right? There's a rally here, and this whole freaking thing's the base.